Hey guys, how's it going? Solo back with another weekend update video. And today I wanted to talk about how to deal with the current market environment and how to maybe think about managing your positions, whether you want to roll your positions out or take assignment in situations like this. And I think the best way to do that was just to explain my thoughts on how I approached this past trading week in terms of my plays on AMD and Space. So this bubble graph here just shows a quick reminder of how we closed the day on Friday. You can see mixture of some red and green on the board, meaning the zero level here is the baseline. All the bubbles above it obviously were stocks or tickers that were in the green. Anything below the 0% level, things like AMD, PayPal, Amazon, these all took a little bit of a hit. Obviously, the further away they are, whether up or down from the baseline, means how big of a hit they took or how much they gained. Actually, I mean, take a look at HII. I'm not sure what this is. Huntington Ingalls Industries actually was up almost 7% end of day Friday, whereas other tickers like NLOC, again, Norton LifeLock, were actually down almost 6%. So overall, kind of mixture of red and green on the board the way we closed Friday, but I would say the big tickers, the big names like the big tech stocks were in the red. And if you've been following my videos, you know I have plays on AMD and Space that I've been playing frequently week to week. So let's just get right into it. I want to start off with Space because I think this is going to be the easiest one. So if you've been following my channel for a while now, I was assigned 200 shares of Virgin Galactic, ticker symbol SPCE, or Space I just like to call it. I would say about a little over a month ago now. And that's because I sold cash secured puts on Space at the 19 strike price. And at the time, Space dipped below 19. So I decided instead of rolling my options out, I decided just to get my shares assigned to me. So I got assigned 200 shares at $19 a piece, not accounting for the premium that I collected, just as an easy way to keep track of the strike price that I got assigned at in my head. So as you can see, if we just look at the monthly graph, we actually have been trading below 19 for the whole month. I mean, back in August 13th, we were a little above 19. And then as you can see from that point on, the highest we've ever gotten is about 18, 20, and we've never really broken above 19. So the following Monday that I got assigned my shares, I basically have just been selling covered calls on Virgin Galactic at pretty much my cost basis of $19 because I want to get the shares called away. But while I wait to do that, I'm just collecting premium week by week by selling these 19 strike covered calls. So if you follow my video from last night, you saw that this past trading week, I had sold 2 covered calls because I owned 200 shares, so 2 contracts for $59 a piece. So those both expired worthless. I was able to collect max profit because, as you can see, Virgin Galactic did not get above $19 by end of day Friday. So I collected 59 times 2. This week alone, I collected $118 in premium. Now, the weeks before that, I was collecting premium, just not as high. They were about, I would say, maybe 10, 20, 30 bucks a contract, which is still not bad. I mean, even if you take a look at it, let's say you do $20 a contract in premium for your selling a covered call. And if I have essentially $1,900 locked up because I have 100 shares per contract at $19 a share, so that's $1,900, that's still a 1.1% return on your capital, which is very good. And the nice thing about it is, yes, I have $1,900 per contract and I have 2 contracts, so I only have $3,800 tied up in my 200 shares of Virgin Galactic. And I put only in quotation marks because I understand that everybody has portfolios or accounts of different sizes, but I'm basically able to generate approximately, depending on the week, 1% return on my capital. So that's not bad if I can get 1% and only end up essentially bag holding about $3,800 worth of stock. So I'm actually pretty pleased with Virgin Galactic, mainly because it's been trading almost flat. It hasn't really just dipped or plummeted hard, like let's say to like $5, for example, because if that's the case, then I would not be able to get such a good return on my capital selling strikes at my cost basis essentially of $19. But let's just take a look at the trading view graph here. So these are the 1-day candles, so each candle represents 1 trading day. And I drew some trend lines here because I think for the past few months, I want to say dating back to around April or mid-April, I should say, it looks like $14 and about 30 cents is a level of support for Virgin Galactic right now. So you can see around here, 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 and then most recently on September 4th, we've come close to the low 14s, but never really broke down below it. So you can use information like this in terms of helping you determine what strike you may want to sell cash secured puts on. But then also, for my purposes, in terms of selling covered calls, I take a look at what possible areas of resistance may be. So again, taking a look back, it looks like this level here around $18.25 is an area of resistance. If I zoom in a little bit, you can see around here, here, and then here was almost a little bit of a support because we broke through that level. So here, here, then again here, here, and here. Most recently, as of September 9th and 10th, Virgin Galactic has struggled to get past about $18.25. So that tells me if my covered calls are at $19, it's going to take a little bit extra juice for Virgin Galactic to blow past this resistance level to actually get to 19 and have my shares called away. So if you have the mentality that you want your shares to get called away, then you may want to set them below what you think the area of resistance is, as long as you're okay with taking that little bit of a loss or maybe limiting your max profit depending on what your cost basis is. Now, if you wanted to sell covered calls but did not want to get your shares called away, then it would make sense to open up covered calls above your resistance line, because then in theory, it would be very hard for space or that ticker to blow past that resistance and then also blow past your strike price. So if I really wanted to, I could start selling covered calls at 18, because by now my cost basis has reduced below $18. So if I really wanted to get my shares called away, I would really want to start selling covered calls at the 18 strike, because it's below this initial level of resistance. But like I said, Virgin Galactic has been giving me some pretty good returns every week so far. And that's because, as you can see by this graph over the past few weeks and months, it hasn't really dipped hard, meaning it's been trading in this kind of range between about, let's just say $14, $15 and about $17, $18. So as long as it trades in between that channel, I'm perfectly fine selling covered calls at 19 and just collecting premium every week. So the next area of resistance by my kind of rudimentary technical analysis looks like it's around $19 and about 75 cents or so. I mean, we can even play with this and maybe draw this up a little bit because there are some candles here above it, but it looks like somewhere around 19 or maybe low 20s, like high 19s, low 20s. There's an area of resistance again, because around here it peaked here again. Here we blew past it, but again came back down it. So this one I'm not so sure about, but just looking back at these candles here, it does look like that might be another area of resistance. So if we do end up blowing past 18 and change, about 1920 may be the next area of resistance. So this is what I kind of do in my head to maybe determine where I want to sell my cash secured puts or covered calls on. So for example, if this coming week I want to open up some more puts, cash secured puts on space, well then what I would do is I may want to, in the perfect scenario, sell a strike that's below this area of support, because again, using the same line of thinking, it's going to take a little bit extra juice for space to drop below this area of support. Now, if you did want to get assigned shares by selling your puts, then you want to sell that put above this area of support, because it's more likely that the share price will hit it. Now again, all of these technical analysis, all these trend lines, these support and resistance lines I draw, nothing is written in stone, right? There's no rule that says Virgin Galactic is not allowed to go below 14 or go above 18. This share price can just do whatever it wants. People use this as a little bit of an extra kind of mental boost in terms of figuring out what is a good strike price to either sell a cash secured put or sell a covered call or even buy calls or puts. So my mentality right now on space and Virgin Galactic is I'm okay and I'm pretty happy collecting the weekly premiums. So I'm going to continue to sell covered calls at 19. And if it gets called away, then so be it. I may open up some more cash secured puts. And then let's say the share price is 19. I could probably open up cash secured puts at that time at like 16 or 17. And that way, if I get assigned, well, now I'm assigned at an even lower share price than I was originally. So that's my game plan for now for the short term for space, is just to keep selling covered calls at 19. Now, my other stock ticker that I have in play and this is the one that's been giving me a little bit more grief the past 2 weeks, is AMD. And that's because it's been dropping. I mean, if we take a look at, let's say, the weekly graph here, kind of rallied a little bit, and then September 10th, it was around $82, and then we closed end of day Friday after market hours around 76. So it's dropped a pretty significant amount, about $6 in the past few trading days. Now, I had cash good puts that I sold, and I sold 2 of them on AMD at the 85 strike, and I sold them 2 weeks ago. So last week, obviously AMD was again up below $85, so I was at risk of getting assigned 200 shares of AMD. So I was hoping for a rally this week, so I rolled them out till this Friday, and I was able to collect about $150 in premium by rolling them out. So that was the first way I managed it 2 weeks ago. Was I thought that that dip 2 Thursday and Fridays ago was going to be temporary, and that we would rally and have a green week this week. So that's why I rolled them out, because I thought, you know what, I really don't want to get assigned these shares. My thesis or my hypothesis is that AMD is going to rally back next week. It'll go above 85, and that can let my options expire worthless. So obviously, looking at this weekly graph, that did not happen. I was wrong. And so now, again, this Friday, I was left with the same decision of, do I think AMD is going to rally again next week, and should I roll my options out again? And I did look at that option, and I would have collected about $27 in premium for another week of time for AMD to get above 85. Or my other option would have been to just let the option expire worthless and then get assigned those shares. So basically collect the full premium and then get assigned 200 shares of AMD. And that's what I chose to do for a couple of reasons. So let's just take a look at the TradingView stock graph on AMD. And again, these are daily candles. So the reason I decided to get assigned shares of AMD was because, we closed Friday around 76, which was pretty far away from 85. And looking at some of the technical analysis that I did on AMD, I thought we were in more of a bearish downturn right now. So I did not think we were going to have a green week this coming week. So I thought rolling my options out for another week at the 85 strike was going to be pointless, and I was just going to basically have opportunity loss, because I don't think AMD was going to gap up about $10 in a trading week, because it doesn't have earnings next week. As far as I know, no scheduled good news is set to break. So I said, you know what? Let me get assigned 200 shares of AMD, and then I'll just start selling covered calls on them. And so then I looked at the options chain on AMD, and I said, okay, what would I collect in theory by selling a covered call at the 85 strike, depending on where the share price is currently? So I looked at it, and roughly it's $28 per contract for a weekly covered call at the 85 strike, which is my cost basis. I mean, it's not truly my cost basis because I'm not accounting for premium, but just for argument's sake, that's the share price that I got assigned at. So that would be $28 in premium divided by 8,500 in capital per contract. So that's going to be about a 0.33% return on my risk, which is not bad. I mean, I have a personal minimum that I like of 0.4, so this is not too far below it. So I said, you know what? I can get 0.3% return on my risk next week as long as the share price stays around this level when we open on Monday morning. And I said, that's not bad. So why don't I get assigned the shares of AMD? Because also, this premium, $28, is pretty much identical to the premium that I would have collected by rolling the option out. It was about $27 to roll the option out in premium versus $28 to sell the covered call. So I said, you know what? Let me get assigned the shares, because that way, if I end up kind of bag holding shares of AMD like I am Virgin Galactic, so be it. I'll just keep collecting premium by selling covered calls and reducing my cost basis week by week. But also, let's say something crazy happened. Let's say stimulus news passes next week, or the Federal Reserve has a meeting and they announce some good news that the market takes favorably. And let's say AMD jumps to $90 next week, right? Well, then I could potentially take advantage of that. Let's say we gap open Monday. Let's say we gap up on Monday. On Monday morning, AMD opens at $80, right? Well, I can take advantage of that and say, you know what? I'm going to sell a covered call at an $86 strike price because we gapped up. So now, if my shares do get called away, not only will I collect a premium, but I'll collect $1 per share or $100 per contract in stock appreciation, and that would amount to $200 because I have 200 shares. So I didn't want to essentially lock myself into just rolling the option out and just basically hoping that AMD gets to 85 by next Friday. This way I can collect premium. Yes, I have the risk of bag holding it, but that's why I choose good stocks and good tickers. AMD is not some meme company. AMD is a stable company. They have a bright future ahead. So I think even if AMD does drop to, let's say, the low 70s, I think it's just a matter of time before AMD gets back up to the 80s or 90 or 100. I mean, before this sell-off here, the past few trading days, people were crying for AMD that it's going to go by 100 because it was in the 90s. I mean, it was up to 94. So people were saying 100 is the next stop. I mean, if we take a look at AMD going back, it wasn't too long ago that AMD was just hovering in the 30s, 40s, 50s. And then all of a sudden, it just took off like a rocket all the way up to 80. So what's to say that AMD can't hover in the 70s or 80s again and then take off like a rocket up to 100? Because actually, next month in October, they are going to be releasing more news about their new Ryzen CPU chipsets, their new graphics cards. So there's definitely some good news on the horizon. In my opinion, and AMD has just been crushing NVIDIA and Intel, in my opinion, in the CPU game, and they're definitely a competitor to NVIDIA in the GPU game. So I definitely am bullish on AMD kind of mid to long term. The only thing that scares me, and if you can see it, these trend lines that I drew, is that it looks like there's a support level here right around 75. And that's exactly where the low of Friday was. So I hope Monday we bounce off this support level and don't break below it. Because if we break below it, there is a gap here around 73 to 71-ish, so low 70s, that may want to get filled. So I feel as though if we break below 75 on Monday, then we are going to go as low as like 70 or high 60s this coming trading week, which is not going to be great for me. But again, we'll have to wait and see what happens. And then if we still break below 69, next gap is around the low 60s, around 64 to, let's say, 62. So that will be like the worst case scenario. If we break below this support level, get down to the low 70s, and then get down to the low 60s. Because my strike at 85 is going to be hurting. And then at that point, my plan would be to sell covered calls below my cost basis. So let's say we get down to the low 70s. Well, I'd probably sell some covered calls at like the mid to high 70s, right? To collect a decent return on my capital. So that was really my thought process for this past 2 trading weeks, essentially, on my plays on Virgin Galactic and AMD. So that's the kind of mental exercise that I like to do when I'm trading. I always like to have a plan in place and essentially a backup plan, meaning if this scenario happens, what am I going to do? Because that way you're not surprised if, let's say, AMD just tanks and you're like, oh no, I don't know what to do. I didn't plan for this. I mean, in stock trading, you really only have 3 options, right? The stock goes up, the stock trades flat, or the stock goes down. So as long as you're opening positions and have a backup plan for each scenario, then you're prepared in all situations, really. I mean, yes, you may have some black swan event where the stock just plummets like 50% in one day. But if you pick stable companies, that's highly unlikely to happen. But if you pick kind of these meme and hype tickers, then that may happen because any set of news, good news or bad news, could send that ticker either to the moon or to the ground. So that's why I like to stick usually to kind of well-established companies because they don't fluctuate that much or they're not as volatile based on news or rumors. So that was the explanation for my trading week and my thoughts for essentially the past 2 weeks. If you have any questions or comments, make sure you get in the Discord server. We're filling up new slots every single day. As always, if you have any questions or comments, you can always leave them in the YouTube comments below. Remember to like and subscribe and turn on notifications. And as always, happy trading.